Hello, people of the internet. I wanted to drop in and give you guys some educational content on something that I think is very important and a lot of people struggle with, which is a basic understanding of price action and really just how to read your chart. So let's dive right in. This is price action 101. What is price action? It's a term that you're going to hear all the time. Price action and price action trading is the study of the movement of price. And for us on our forex charts, usually that is candlesticks or the bars that print all the time across your chart, right? So price action is the study of the movement of price, what is happening in price, what it tells us. There are three market phases that you need to know. You have an uptrend, a downtrend, and consolidation. So in an uptrend, you see higher lows making higher highs, and then new higher lows making new higher highs. The trend is going up because it's appreciating or going higher, and that's driven by something called demand or buyers. So buyers are in control, and we see a repeated pattern of them putting in orders and pushing price higher. In a downtrend, it's the opposite. You'll see something called lower highs and lower lows, where we break into new lows because of something called supply or sell orders. These sellers are in control in a downtrend. This pattern of behavior is created by their sell orders. And each time we get an expansion into a new low, the market pushes further. The asset depreciates. So in uptrend, buyers are in control. It's a pattern of price moving upwards based on supply and demand. In a downtrend, we see sellers in control, creating lower highs to lower lows and expanding downwards. So what happens if nobody is in control? What happens if there's not a clear trend of the market? That's when we get something called consolidation, or you see price move sideways, where essentially neither buyers nor sellers can create a pattern of control. And so the market moves sideways until one of them assumes control and starts to create either an uptrend or a downtrend. You can also think of sideways movement as transitional price action, or a point in time when buyers and sellers are deciding who is going to take control next. This is some of the most basic aspects of price action. Let's move on to the next piece. What makes candlesticks, or what we see on our charts? Supply or sell orders and demand or buy orders. If a candle is going up, it's the result of buy orders or buyers. If a candle is going down, it's the result of supply or sell orders. A trending market phase is the result of buyers or sellers establishing a pattern of control. When neither are in control, you see consolidation, aka transitional price action. Pretty simple. So you'll notice on your chart that you've got a lot of different time frames at your disposal. The monthly, weekly, daily, H4, H1, M15, M5, M1 are kind of the standard ones that most people start out looking with. You can add more in between. I use the H8. I use the 12 and 10 minute, the 3-minute chart, all for different purposes. So which time frames do we use and what do we use them for? Let's start off with high time frames, or commonly abbreviated as HTF. High time frames help you build your overall directional analysis and bias. What that means is your high time frames inform you on what has been going on for a pretty long amount of time. These big high time frames are the most powerful tools at your disposal to help anticipate and predict where price will move next. Also, your high time frames are going to show you areas of supply and demand, and they are the absolutely most important levels of supply and demand for you to consider. Your high time frames consist of your monthly, weekly, daily, and 4-hour charts. Predominantly, I use the weekly, daily, and H4 charts or 4-hour charts. I look at the monthly at the beginning of the month and the end of the month. I look at the weekly at the beginning of the week and the end of the week. I look at the daily every morning. I look at the H4 all the time while I'm on my charts or doing analysis. These are the 3 charts, in my opinion, that you need to start with when looking at your high time frames, looking for your overall opinion on what your trend is, what your overall directional analysis is. Where is supply? Where is demand? Where are those important levels that you should consider as you start to try and trade? Your low time frames, like your 1-hour chart all the way down to your 1 minute, are used to monitor the transition of control or transition at high time frame levels. So you use your low time frames to monitor transitions in price action. A transition starts on your smallest time frame. For most retail traders, that is the 1 minute chart. The transition starts there. And then it has to do something called follow through, which I'll explain in a moment. We also use these low time frames to monitor follow through, or the price action that happens after a transition begins. So what the fuck is a transition and follow through? What does that look like? A transition would be when the direction of price action changes. So obviously I can't draw candlesticks super quickly. We're going to just use a line. And I want you to think of it as trends. So let's say that price action was trending upwards. This could be the M1 chart. If price action broke below the demand where buyers were in control of this uptrend flow, we would potentially begin a transition or a change in the direction of price action. Follow through is when we get that change and the pattern happens. Now, this would be the start of what we would call a 1 minute transition. This right here. This would be called a break and retest, or commonly abbreviated as RT. So a break and retest, and then sellers take control. Sell orders come in, and the longer that this pattern goes on, then it starts to affect our higher time frames. That's called follow through. So for example, if this was my M1 chart over here, right? Let's say it's like this, we get this break to the downside. Maybe overall, this was my 5 minute demand. If we went up to the 5 minute time frame, we might see that as our demand. So if we get this pattern continuing down, then we get our 5 minute transition, right? 1 minute transition starts here, follow through starts to come in, then we get this break below, and we are looking for a retest relative to this whole thing. Price can do this so long as it continues to push downwards into new lows. And that shows us that in this instance, sellers are in control. So a transition is a change in price action. Who's controlling price action? And it starts on your lowest time frame. Follow through is when that pattern continues to happen and it shows up on higher and higher time frames. The longer that follow through shows up, the higher the time frame transition you will see. So this is all good and fun, but you need to be able to see it on a chart. Let's go to that. So to illustrate these concepts, I'm going to take a look at AUD, USD, and the first thing I'm going to do is I'm going to start here on the weekly. We just want to indicate what our current flow is, right? From right here, May 2021, we've been seeing this big push to the downside. We saw some retracement once we broke this supply right here, and then we broke that demand. And when we broke this demand right here, big push on back down. Now, we do have a structure point in play that I've highlighted for you guys in that weekly analysis, but as of right now, this was the last place where sellers on the weekly showed some participation in a big way. So this is a supply that I would mark out, and then I would also want to watch this demand on this time frame. That's about what I'm looking at on the weekly. What is my current flow? Like, where am I seeing pressure from? What might the daily be doing in relation to that? But we're going to start looking at transitions and follow through on the daily chart. So what I want to highlight here is the switch of flow that we had right here. So this was our last supply of that weekly leg to the downside. We had a supply broken. That means we had a break of flow. I'm going to put that down as BOF. This is your supply right here. This was the start of a transition on the daily time frame. What happened? We continue to push up. We find some new demand. We start a new trend on higher. Price pulls back a little bit. We switch flow here. That's a pullback in relation to the daily flow. Right on down. And now we're flowing higher. So if I looked at this right now, if I had looked at this flow leg right here, what trend would I say this is overall? Are we going up or are we going down? Are we seeing higher lows and higher highs? Yes. Okay. What was the most recent move? What was the most recent push that we saw? We saw this big push on higher to make these highs. And now we're seeing some retracement against that potentially, right? So if price can stay above this demand, I've marked out in red, if price can stay above this demand, we're maintaining our flow. If it breaks below that, that is the start of a transition because we broke that demand and buyers are no longer in control of that market, right? Now, what we're going to look at within the context of this daily flow leg here is the retracement that we've now seen come back down. In order to do that, I'm going to move to the 4-hour chart. And what I've done here is I've marked out this H4 demand. This is going to be more important when I talk about this leg to the downside in detail here. But as you can see, once we broke that final demand of this bullish flow to the upside, big push back down. This signaled a start of the retracement relative to the whole trend. So big flow to the downside, big flow to the downside. What has recently happened? We broke the supply. If we were to see something like new higher lows and higher highs, starting a new flow on up higher, we will come back up and retest this daily supply. If we go above it, the trend is expanding. So this gray line would be the follow through of the transition we're seeing right here. We broke this 4-hour supply, a break of flow, broke the bearish flow. We started to move with the higher time frame trend. That's called pro trend or with the trend. Price is going to pull back down a little bit, get some more orders somewhere in here, and then we're looking for it to exceed this supply. So pretty much what I like to do in this instance is I would wait for this candle to close, this bearish candle to close. Then I would call this supply. It's looking like it's going to happen, but we can't predict the next hour of this 4-hour candle. So just understand that if a candle's not closed, it's hard to say that it's a solid level. it looks to me like we are going to pull back and try and get a new higher low to higher high. So what we can do here is we can set up those parameters moving forward and say, okay, these are my H4 zones right here. Boom to boom, boom and boom, right? If price can stay above this, and if price can break above this, we're seeing follow through, or that gray line. So this is the start of a transition. Now, what I want to do for you is I want to show you how a transition starts on the smallest time frame. So in order to do that, we're going to go back up here. We know this started bearish flow based on what we've talked about so far. What I'm going to do is show you where on the M1 chart this transition began, and then we'll talk about how to move up higher time frames and read a transition and follow through. So let me get right up there with the little replay tool. Okay, so on our M1 chart, the very highest point of this supply, this was where we initially started breaking this flow. This created our high right here, and we started to retrace and pull back. This is found by finding the last bullish push. That's how I found that demand. The last bullish push on this very small time frame shows me that we may be starting a transition. We did. What happened? We started to push on down, but it lacked follow through, and it couldn't make it through the 5-minute demand that we have down here. So what happened? Price pulls back up, retests your supply, and then transitions again. So once the 1-minute chart can follow through long enough to break this 5-minute chart, we would then be seeing a 5-minute transition, right? So once we get this push to the downside right here, we're seeing a 5-minute transition. At this point, price must stay below the supply that created this leg to the downside. Simple rules. So as long as price stays above this and makes it past our next higher time frames demand, that's our 15-minute demand, which lives right here, the last push to the upside that created the highs. Did this push right here create a new high or a higher high? No, it did not. We can tell that by our OHLC values up top, or just visually, you can tell that this is higher, right? So this is my 15-minute demand. In order for the 15-minute time frame to transition into bearish flow, we would need to see a break below this area. And if we go to the 30-minute, it's also right here. If we go to the H1, it's also right here. This is a strong intraday demand. So if you're looking for follow through, what you want to do, if you had wanted to take a short here, you want to work your way up the time frames and know what levels of supply or demand need to be broken to give you that follow through. Remember, we're looking for these time frames, higher and higher time frames, to establish a pattern of, in this case, for a downtrend, lower highs to lower lows. So let's just see what happens. Price comes back up, honors the top of this. We're looking for a low built below here. That would be an expansion. One way to think about this would be something like this on the line chart. If price broke below this low after starting its transition, then we would be expanding to the downside, right? So let's go back to the 15 and turn it back to candlesticks. If price can honor this supply right here, which I'll mark out with, just this yellow box for you. If price can honor this minor supply that has now pushed flow down on the 5 and the 15-minute, we're looking for a fresh low to be created or an expansion. Okay, now price continued to push down and we got that expansion. At this point, price must now stay below this level, our fresh supply that gave us the lowest low. Then we're looking for it to continue on down lower and break that M15 demand, give us that confirmed M15 flow switch or transition. If price can break below this and continue to expand on down, we're looking for it to take out the M30, the H1, and come back to our H4 demand, where we start to care about the high time frame story. So let's let it go. We can see that price continued to put in expansions lower and lower. Price broke our M15 demand. Price broke our M30 and H1 demand. So all of these timeframes are now transitioning to bearish flow. If I go and look at these, they're all pushing into bearish flow. That is follow through. When in this instance, a transition into bearish flow could go on for long enough to break these levels of demand from higher and higher timeframes. That's how we gauge it. Okay, so eventually this is going to come back and break our H4 demand as well. This is the start of a high time frame transition. And this was our first hint that we were going to get a pullback relative to our daily leg. Once our H4 flow switched and we started to get a transition, we knew that price needed to stay below this level of supply and continue to put in lower highs and lower lows, or see new levels of supply expand and expand and expand. So let's just watch what happens. I'm going to go on to a slightly more detailed chart so we can see it as well. Bit of a retracement flow starts right here relative to that 4-hour push, and then we expand down. Let's go look at the H4 as well. H4 expansion here. Okay, lovely. So price is pushing down, right? And if you were monitoring this and you were trading this, for example, you would just want to mark out these H4 supplies for the downtrend every time a new one is printed and creates an expansion. That way you can just keep an eye and know what needs to be honored or what needs to not break in order to keep the downtrend going. Eventually, we see that price came back down and retested relative to this leg. At some point, we are looking for price to transition bullish. Price needs to transition bullish above the red demand zone. I cut off the candles to the left over here so we can just focus on what's going on. But we're looking for price to break a level. So right here, right now, that would be our H4 supply, for example. We're within our weekly and daily demand zone over here. And what do we see? Price has now broken that H4 supply. This is the start of a transition on a big high time frame. And if we went down here on the M1, we would come to find out that the transition started on the M1, followed through to the M5, M15, M30, H1, so on and so forth. Now, this potential transition to bullish flow on the H4 is the same direction as our daily flow leg, our trend on a big high time frame. Okay, so if we see a bullish transition here, this could be a really good opportunity for a trend continuation trade. What we're looking for now that we've gotten this break of flow right here, we broke our H4 supply, is we're looking for a pullback relative to this leg of price action, a new transition like this gray line and arrow have. We're looking for a succession or a series of higher lows and higher highs. Somewhere that we might try and get in is wherever this ends up being. Right? There's ways to tell where it's probably going to happen, but we're not going to get into that in this video. This is just about the basics of price action. And I want to give you some examples on a chart, so I'm hoping that this helps. This is how we start to build an idea. If price pulls back relative to this gray box, relative to this H4 demand that has switched flow, pro trend, if we get a retest, then we need to see a new high printed and we need to see a pattern push on up. We can target the daily supply level. And if we break above the daily supply level, it turns into a swing trade. This is follow through. Now we're seeing a transition happening right now today. Then we need to see some sort of pullback and follow through, a new pattern of higher lows and higher highs. If we go down into this, the lowest portion, what you're going to find out is this is where your transition started. Then if you move up to, say, the 5-minute chart, this was also our M5. supply that was created. You could say it was right here, depending on how you read it, but I see this as printing our lowest low. So we had an M1, M5 transition here. Our M15 was more so here. I'm judging that based on big candles. This was a short push with some wicks. So it's a little subjective, but I would personally call this my M15 supply right here. Then I go to my M30, same place. M30 is M15 as well, H1. H1 is pretty much the same. You would have to include this white wick. So that's your H1 right there. And then again, this is your H4 supply all the way up top. By marking these things out, I know where price needs to follow through past in order to really start on a bullish push. And by understanding that market flow, I know what direction to trade with. If I go up to, maybe my H4, I'll find that I see the supply here. If we break above, then I can start to make a plan. So let's see how this goes. Let's watch the M15. That's the first one that needs to break. Okay, price couldn't quite make it past that supply, so it needs to stay above in order to transition. It needs to stay above this level of demand that is pushing up, right? So if this is where our M1 and M5 transition started, price must stay above that in order to continue to attempt to transition this M15 and M30 level. Price cracks this level right here, and this is now my relevant demand on this time frame. Price must stay above this and then continue to work up into that H1 supply as well to give us a further break of flow. What happens? Price comes back down into our demand very accurately and then pushes on up higher. Now we could say that price must stay above this level in order to maintain this M15, M30 flow. It makes sense, looks good, right? If we just drag this over so you can see the wick, this is a strong level of demand as well, right? Creating this transitional price action, this push to the upside, a little bit of sideways movement, and now we're getting that bullish pattern. So price cracked above the H1. Our H1 is transitioning. We need to see a new high made here. Price comes back down, pushes back up. Our H1 has now transitioned. So now price needs to stay above this level. And then break our H4 supply. Price went on a rip and pushed on up higher, broke our H4 supply, and started our switch on a big high time frame. Now, this final demand here on the H1, this final push to the upside right here, if you notice, our retracement starts when we break that H1 demand. What are we seeing? We're going to retrace relative to this move, and we can now look for an opportunity to get in on a H4 transition that is in the same direction as our daily flow. That is a high probability pro trend idea. So by understanding the basics of price action, by training your eye, by looking at these high time frame pivots and breaking it down from the M1 to the M5, 15, 30, H1, H4. By training your eye to see these things and understanding how a transition works and how follow through works, we can start to anticipate how the market is going to behave based on how it is behaving. I hope that you can work with this and use this in your trading in some way. If you can, give this video a thumbs up. If you don't already subscribe, hit that sub button. And if you feel like it, leave me a comment. For more information on price action trading, head over to my website, Mighty Fine FX. I'll be announcing some things here within the next week or two. As always, have fun and trade safe.